Good morning, good afternoon, ladies and gentlemen. I'll just like to quickly introduce myself. I am Kopano Nakedi from Sirius Fintech, in my capacity as its CEO and one of its founders. Now, before we get started, there are just two things I want to point out. The first is that the slides are merely a cue card, I think, because I'd like this particular presentation to be underlined with a bit more dialogue than a speaker and a listener. So please don't be alarmed, just try and focus on what I say. And the second is, before I get started, I'll share a proverb with you from my African colleagues in Benin, who say that you must attend to your business with the vendor in the market and not the noise of the market. And I would like to all to keep this in mind as I progress through this particular presentation, because it is an essential aspect of how we tackle what is, by definition, a simple topic, yet very complex in its implementation. So in the pursuit thereof, one must distinguish between the popular conception thereof and the realistic vision on the possible deployments regarding tokenization. As well, I'd just like to add that I will be giving it in an African context, because it is our view that tokenization is a very broad topic, and each market has its own unique approaches that will work. I'm sure you can tell by the previous callers that you're dealing in different markets that have different demands, different constraints. And so for us here today, I'll just be focusing on an African perspective, and of course, South Africa as well. And any questions, please do post them. I will attend to the questions at the end of each portion of the presentation to the best of my ability. So without being ceremonious, let me get to it. So yeah, we are a think tank based in South Africa, with the aim of being a leading researcher, developer, and operator of blockchain deployments on the continent. We were founded in 2018 by, I'll mention Tato in her absence. She's our COO. Her background is she's a treasury specialist and a qualified CFA with 10 years experience. And myself as well, I've studied finance and had a bit of experience in the Middle East and Africa. And so our background being financial investments, this served as the basis of the synergies in my discussions, or our discussions rather, with DigiShares. Now, before I get to it, for us, it is very critical that I highlight a bit of background. So our background is that we did investments and of course advisory, all the way from inception of a real estate project. So that would involve, for an example, the zoning, all the way to capital raises for various stakeholders in South Africa. And on the continent, we have been exposed and played a critical role in the financial modeling of rural telecommunications rollout of infrastructure in countries such as Sudan, Nigeria, Benin, etc., with Hanin, a company by the name of Vanwe as well, I think from America. And they're doing that with MTN, and we are part of that team as well. So our exposure has been pretty good in terms of understanding the dynamics throughout the continent, as well as, of course, our exposure in the Middle East through commodities trading at the DMCC. So currently within the financial industry, we have established a very bespoke and innovative finance firm for SMEs. And it is a tailor-made solution using, financial and non-financial covenants in order to ease the constraints arising out of short-term liquidity. We're currently doing beta testing. That is a system we developed in conjunction with TF, which is a company also based in Tshwane or Pretoria, which is the capital. And today, though, the focus is, of course, on the real estate market and our project Euphony Properties, which we are doing with DigiShares. So why Africa in particular? Well, Africa is an opportunity that is, of course, very fertile for what is termed the fourth industrial revolution. We have had some brilliant products that have come out of this continent. I've put a few of them on the screen. Everybody's familiar with the the globally renowned mobile payment system from Kenya, and there's some good people doing good things in Nigeria on the remittances side, working with some guys in London, and they are in fact having conversation with the Central Reserve Bank. So that shows a good progress. And of course, in South Africa, we are home to what is termed the best business bank for SMEs, which is an award that was of course bestowed upon one of our big four banks by the IFC. Now, that tells us that South Africa and Africa, of course, is an environment that is very, very fertile for innovations, primarily because, of course, it's not fully developed. So it creates gaps that allow the solving of challenges in a unique fashion. Now, moving on to the value proposition of tokenization, I'm going to break this up into three portions. Firstly being the introduction, the second being defining the value proposition, because I think that is a very critical component of understanding the approach in rolling out such a endeavor. And that will be contextualized within ourselves as a case study, because we are about a month and a bit away from rolling out our first project, and then our thoughts on the future of tokenization. So everybody knows tokenization to be, of course, a digital representation of assets. However, one needs to give it a context, because value is dependent on the perspective and the context, right? So regardless of all of that, of course, you'll always have the asset test, which lies in the economics, which was covered by the previous speakers thoroughly, although there will always be different answers to the same question. When we ask the question of the value, we refer to the different vantage points of the ecosystem itself. So in pursuit of optimizing the design and configuration, we look at the value proposition to asset owners and to investors as well. So we seek to service the retail and institutional market. And how do you allow these two sectors to cross-pollinate is by streamlining the process of investing while preserving the standards required in your more institutional spaces. Of course, not at the expense of increasing the cost of doing business. So I will touch on that a little bit, as well as our plans going forward. So from an asset owner's perspective, we ourselves do have a few properties in our portfolio. We'll be using one of them as part of the litmus test, if you will. And there's capital raising, liquidity, and unlocking value. On the part of the capital raising, studies have shown, of course, that a large part of being able to access capital markets lies in the underwriting fees and other management and intermediary fees, right? So there you're looking at about roughly 10 to 15%, according to a study done by OPEC as well as the JSE in South Africa. And above and beyond that, you've got a further, let's say 5 to 10%, depending on obviously what kind of asset you're dealing with and what kind of institutional investors you'd like to onboard. So that already results in about 20% of the transaction value going to facilitation fees, essentially. So there's an inefficiency that tokenizations offers a value proposition for. On the part of liquidity, I must stress this is from the asset owner's perspective, and that is if you would like to unlock a bit of money or funds in order to pursue what would have been an opportunity cost in other circumstances. So perhaps you want to also restructure your balance sheet in order to create a foundation for it to be a growth enabler, and many other different reasons. But from the asset owner's perspective, of course, it means that you can liquefy efficiently and with a lower cost to doing it. And that obviously broadens the amount of opportunities from a capital raising point of view, because you've got retail investors, and within retail, you've got many different ones in South Africa. I'll get onto that a bit later. But yeah, in the main, that is an opportunity it affords. And because you've got a reduction of the transaction values, as well as an opportunity to access a larger investor base, that results in unlocking a bit of value. Because when you save costs there, of course, it doesn't erode out of the returns that would have otherwise been achieved, because sometimes that is the line between feasibility and non-feasible. So that is very, very important for us as a focus point. And then from an investor's point of view, the way we want to deliver this product to market is to focus on the freedom of asset allocation, which is a democratization, of course, of investing, essentially, a broader opportunity pipeline. Now, this is, of course, important because when you're dealing with an asset allocation and opportunity pipeline, usually the first question I always get is, but if you want a diversified portfolio, you can go to a REIT. Now, while this is true, there is a bit of a limitation on what opportunities a REIT can access. I've spoken to quite a few of them, and the answer is always the same. The opportunity pipeline they can entertain is always one that needs to be of a very large scale, primarily because the pressures of being a listed company is that you need projects that are going to move the needle. Otherwise, of course, it reflects not so positive on your company. So if you want access to opportunities that are at times beyond the reach of your REITs, it still becomes a relevant value proposition. And then, of course, the cost saving on the secondary market that was touched on very well by my learned friends. So I won't necessarily delve in that too much, especially because the economics thereof still need to be fully ascertained, as well as the regulatory component of it. We still at loggerheads with the regulators here on that one. So it's not so straightforward. Then, of course, the transparency that blockchain and the platform itself affords, because with that, then it means, trust does not become such a major hurdle. Now, I've put liquidity here not because we believe it is actually a value proposition, because if you cannot offer liquidity, we don't believe you'll be in business for long. It's just as simple as that from our point of view, that is, because otherwise then you might as well just continue to pursue other means of asset allocation and investment opportunities. So as a value proposition, I don't think it is. However, we always keep note of it because it is a question that needs a solution. Otherwise, the longevity of the sector will be in question. So the solutions that are springing up all over the world are very important. And here for the African market, it's going to be critical that we also solve that particular question mark. We do have a few ideas that we're working on, but that will come in due course. We just need to fine tune a few instruments with a few stakeholders to enable liquidity within a compliant fashion. So the reason I mentioned these components is because they are all interlinked, and from our perspective, it is very important that we always keep these in mind, as it informs how we approach the next phase, which is, of course, a rollout for it. And we have spoken to many investors. Currently, we have about 2,000 on our list of interest who are waiting for us to do the first project, and we're very excited to be doing that. Another point that I think is very important that I touch on is that the security and the transparency is a very critical point, because it will also speak to the regulatory component, because I do anticipate questions about that. However, the way in which we've given a long thought to this, I mean, Klaus would know we spent over probably close to a year trying to structure it in a way that keeps it compliant without taking away the efficiencies that this particular approach affords. And by definition, of course, we are peer-to-peer in South Africa. The test is always in form. However, then the way we structure it is such that you create obviously the SPVs, and you seek to appease the space by making sure certain prerequisites are in place, which is what we do. So for an example, the corporate governance component, we try very much aligned to the norm of the industry as a whole. So that would involve, a quarterly publications, not necessarily to the public, but to your shareholders themselves, giving them, of course, the voting rights necessary, as well as the legal entity at play. So it's not the same as an OTC, because it's the structural, the contract itself, which is the shareholders agreement, is such that it's governed by the what we have as the Companies Act here in South Africa. So if you structure it like that, you do satisfy a few of the regulatory hurdles you will come across. Then, of course, the other ones, such as the flow of the funds themselves. And we are happy that we have one of the major banks working with us in order to create a reference validation system for the flow of the money, so that at no point is it really in our hands, so it allows the investors in real time to be in control of their funds from their phones. So those kind of questions we've been answering in order to be able to deliver these value propositions, so that regardless of whether it's 1 million or 100 million, whichever currency it is, opportunity, the standards are preserved. And what this does is it makes it makes it expensive to start. However, operationally it becomes very efficient. So of course, you can imagine we spent a lot of resources so far just structuring it legally and getting the reference validation system in place and things like that. But that is just merely to protect investors and asset owners alike. And that, of course, increases the cost up front. However, then operationally, once those things are in place, it becomes very straightforward, because you have, the shareholders agreement being essentially a minted version that will automatically be populated, accordingly, and be signed by the relevant parties to the transaction. So those allow us to gain the confidence of investors to understand that the investments are protected, they're in control of it at all times. And because of the way the money is managed as well, if there are corrections that need to be made, that is possible, with, of course, a correct process. So for ourselves, as a result of that approach, or under the auspices of that approach, we have 4 assets that we will be rolling out in different segments with different capex levels, that being a residential development, a residential block, a retail center, and a major office block. And I could not, I thought I had limited time, so I didn't plan to go over each particular opportunity. However, I'll touch on the residential one that will be in the capital, that has a capex of about 10 million US, with 115 units. And I'll touch a little bit on the way in which we've structured it, because this particular one has taken a few months to put together and has a very unique approach. And that approach lies in the stakeholder mapping that we had to do for it. So for an example, you have your retail investors, you have institutional investors, and of course, you've got the platform itself. So what makes this unique is that you've got, for example, the agents who still need to serve part of the value chain, because the developer, which we ourselves have a position in, is not necessarily your core faculty. So all of these particular stakeholders need to play a role in it. And that proved a very, very interesting approach, because for an example, an estate agent in this case will be having their own credentials in order to deal with each particular client's approach, because it's a sectional title development. So, you have the option of buying with leverage from the bank, or buying into the remainder, which would be 40% odd of the development. So that would be the equity stake we retain as a holding company with joint venture partners, and then 60% is floated. And the way that 60% is attained can be through cash, or leveraging with the bank. So what the estate agent does, for an example, is streamline the process, because they interface with the bank, but you onboard on the platform. So it's going to be very interesting. We're looking very much forward to it. And with regards to the residential block, that is just to test the market when it comes to the cash flow versus ground up development, because obviously they've got vastly different risk connotations, and therefore they will, spark the attention of different types of investors. And through that process, we'll be able to ascertain what is the best and most in-demand way to approach this particular uncharted waters, if I can call it that. Yeah, so I did touch on all of this. I just didn't go to the slide because I was thinking at the top of my head. With regards to the future of tokenization in Africa, we communicate with colleagues throughout different countries. We're doing a few collaborations that we've been working on, and the Africa Continental Free Trade Agreement is serving as an enabler, especially with the movements of funds, because it facilitates investments amongst the different countries here on the continent. And we also believe that fund tokenization is most likely the most sensible way forward. I think it's going to be, and when we say fund, we don't mean like a REIT. We just mean that unless you have a variety of offerings, it will struggle a little bit. I think when you do, unless you are doing a large scale tokenization, because we initially, when we try to do, normal, let's say 10, 15 unit residential block, for an example, we tried to do that test towards the end of last year, and it struggled to gain a bit of traction, in part because the feedback we were getting was that, if it's a little bit of a variety, it allows us to maybe then expose ourselves to this asset at this amount of money and then another one at that amount of money. So that is the reason why we want to start with 4, just to see how that variety plays out within the scope that we have at the moment. And given the African demographics, everybody is aware, I mean, the average age in Africa is about 20. So that means that from a technology orientation, it's primed for high demand, in the retail space especially. And it's going to, of course, result in many new different services. So for an example, we had an approach, recently of a company that wanted to do tokenization, and a real estate company, that is. And they actually primarily wanted us to assist them, for an example, with the design of the instruments, because they wanted to also float a bit of debt and equity priced differently. So, which is a very interesting discussion we are having with them. So but they don't necessarily need us to, participate in the whole tokenization process. They just needed advice in that regard. So that just shows you that there's limitless possibilities in terms of the ecosystem and what it will produce. And we're very much excited about all of this. I think for now, yeah, I'll just leave it at that. I would also share that, within the South African context specifically, it's well known that we have 2 economies here. We've got the what you call the formal economy, and you've got what is called the informal economy. So, for an example, about 200 billion, or no, let's give or take the exchange rate, maybe 160 billion to 180 billion US dollars of real estate is unbonded. In other words, it's got no gearing, no leverage from the bank. And the majority of that is with the informal sector, And at the same time, you've got an annual cash economy of, about 45 billion, because it's just over 500 billion rand. So, you've got a huge untapped market that needs a specific approach to our people. You've got the developed market, and that is very, very straightforward to service. And it is a market for us, we believe, is just going to get saturated in any case. So our advantage is that we come from the market we're trying to service. We come from that space of cash economy, the team here at Light, and we're very much excited to be specific with that particular, appetite. I mean, for an example, with the residential, it might be it's in Brooklyn, which is, my American friends always are bemused when I tell them that, Brooklyn in here on our side is actually a diplomatic suburb. So it's a very high-end suburb. And they're always amazed by that. But yeah, but just because that is the asset doesn't mean that the investor base we require needs to be those that are living around there. What technology allows you to do is reach, demographics that don't need a gazillion foot soldiers. Because if I'm talking about a cash economy that's 45 billion, and they can get a, real estate exposure in an area far away for as little as, $500 US. It's something worth pursuing, and we look forward to seeing how that plays out. Yeah, I think I'll leave it at that. A bit fragmented, but hopefully the questions themselves will give a more informed
Thank you very much.
interaction.
Great pleasure to get a perspective from your part of the world. I hope it was interesting for everyone as much as it was for me. We are running a bit over time, but I think we can just do one question for you, and then we'll go into the panel. So there's a question from Davey here. Maybe you've seen it. How do you deal with the regulatory process in South Africa? Good question.
Sorry, say that again. Is it in the chat?
It's in the Q&A. So how do you deal with the regulatory process in South Africa?
Yeah, very good question. I did touch on it briefly. Well, besides fighting with the regulators, we don't fight to necessarily disagree. We engage robustly with them in how we structure it. They are not in a position to ever, officially endorse certain things. But for an example, right now, we are in conversations with them to get a, sandbox license, which basically means that, you get a license, a financial service provider license, but you are testing waters they don't themselves understand. But currently, structurally, the way we structured the transaction means that it is a normal business-to-business transaction, because it doesn't yet involve a defined secondary market, firstly, which is the key part of the regulatory hurdle, because once you are openly marketing a share or a bond, it's an instrument, whether you like it or not. You can call it a token, a coin. What you call it is not going to overpower the form of that instrument. So on that particular component, we are trying to find the best solution. They're very open, though. They're not stubborn about it. So we don't foresee any problems in South Africa regarding that. I think for them, the way they interact with us, it's just a case of protecting investors from fraudulent activity, which is why we incorporated elements of governance like the quarterly results, the complying with the Financial Intelligence Center Act, which is the KYC, the anti-money laundering provisions and those things, so that we can appease those particular concerns, because this is a genuine attempt at access to new markets and other intrinsic benefits. I don't know if that answers it, but at the moment, the Companies Act, if I'm to reference the legislation, is the one that would govern the transactions we are about to embark on.
Good answer. Thank you very much. Do you mind writing your email address in the chat dialogue? There's a couple of people who would like to get in contact with you. Okay, no,
I will post it in there. I'll post my own personal one. And, if anyone wants to get in touch with Tato, for an example, I did mention a credentials treasury specialist. She deals very much with the continental aspect of things, because, CFA is a correct knowledge base to deal with that. So if anyone wants to, get more information on the continental perspective, she's very much at the forefront of that. She couldn't join us today. A bit of a tight schedule, but nonetheless, she did wish us well and sent her greetings to everybody, by the way. Yeah.
Thank you. Thank you very much. Great pleasure to have you here on the webinar.